Denali webinar for January 21st, 2015. Okay, it's good to be back, guys. My name is Jeremy Beislein. I am a trainer here at Cougar Mountain Software, and I'll be your presenter today for today's webinar. So today, what we're going to talk about is the year-end closing process in Denali, how that works, and what to do on your year-end close for all of your modules. We're going to go through the preparations for the year-end before you do anything on the year-end close in Denali. Then we'll talk about what to do at the end of each year for each module, each of the sub-modules like AR, inventory, sales, etc. Payroll is a little bit special, so we'll do that one separately. General ledger is the actual year-end closing process, which will be the final step that you would do in a year-end close. And then after the year-end close, you have the option of purging history to keep your database nice and clean. So we'll go over all these topics. At the end of the webinar, we'll answer the questions that you put in the chat here, and we'll try to get to all the questions. We're limited to 30 minutes today, so if we don't get to all of your questions, then check back on the website, and we'll have the answers posted there for you. All right, so the first thing we do before we do a year-end close is we prepare for the year-end close process. With the year-end close process, for some reason, not there we go. With the year-end close process, we prepare by first doing a backup. That's the first preparation step when you're doing a year-end close in any of the modules, any of the purging, any of the year-end processes. Always, always, always do a backup of your data first. That is the most important thing that we need to do. And to do a backup, you just simply go to your controller module here, and you can click on the navigation screen here to back up your company data, or under the options menu, you can click on backup company here. And when you run the backup, it's real simple. It's just like backing up when you're doing your regular daily or weekly backups. However, for year-end, you may want to identify this backup as a special year-end backup. So the last segment of your file path in the backup is normally stamped with the date and time, the 2015 01/21, that's our date, and the 12/11 is the time. So you can relabel that and call it 2015 year-end. And that would basically set that backup aside in your backup directory as a year-end backup. Or just like any other backup, you can specify a different location to put that. All right, after you've done the year-end backup process, then the next step we want to do is we want to do a history company. History company is not the same thing as a backup, although it gives you a copy of your company like a backup does, but it relabels the copy under a different company file, a different company database. Now we want to do the history company before we process the year-end close, and that way if you need to go into your company and pull up any information that's no longer accessible after the year-end close, you can go to the history company, and that information will still be available to you. To get to your history company, it's under the options. To create the history company, it's under the options menu, copy organization utility. That is the option to create a history company. When you run this option, what this does is this brings up a little tool that pops up here, and it shows the source organization as your main company file, and then you give the new organization name. This is going to be your history company. Account 2014. You could label it that, for example. And then you want to go, for the abbreviation, you want to go year-end 2014, or give it some other kind of an abbreviation to identify that this is a history company for the year 2014 or whatever year we're closing out. And that way you have all of the information accessible in this file before the close. Because moving forward, your main company file is going to be closed out for the year. So that is what a history company will do for you. When you create that company, then what will happen is when you log into Cougar Mountain, you will see that company listed here in the list that you can access if you ever need to go back into there to pull up any of the information from the previous year. So once we created our backup and then our copy company, our history company, now we're ready to actually get started on the year-end close processes. Now each module has different processes that you run a year-end close, so we'll just quickly review those different processes in the modules. Accounts receivable is our first one that has that we're going to go over today. So we'll bring up Accounts Receivable module here. All of your year-end process information you'll find in the menu at the top here under Period End. For Accounts Receivable, we've got two main year-end processes that we run. The year-to-date customer totals and the credit card totals. These are the accumulated amounts that have been added up throughout the year for transactions posted to a customer and for credit card payment transactions in the Accounts Receivable module. If you want to reset that each year so that you just have totals for year-to-date, then you would come in under the Period End menu and you would run this process here to reset that. Now, of course, every time you do a year-end process, it tells you to always run a backup before proceeding. So we've already run our backup. We just click OK, and it will go ahead and reset the year-to-date totals for the customer. For Accounts Receivable, that's pretty much it. It's just resetting totals is all we're doing there. So the next one we're going to talk about is our inventory. The inventory module, it's very similar to Accounts Receivable. We're basically just resetting numbers that have accumulated throughout the year so that you can start over for the new year and have those numbers accumulate for the current year rather than just keep adding on from the previous year. And in inventory, the only number we have to reset is the variance amount. The variance amount is the amount in the inventory code that's the difference between the standard cost and the actual cost of inventory items as you receive them, and that only applies if you're using the standard costing method for the valuation method. Most people that don't use that, you won't ever have to worry about resetting this number. So inventory will probably not even be an issue at year end. But if you're using standard cost, you will want to come in here at the end of the year and reset the variance amount. If you're using FIFO, LIFO, or weighted average, you don't need to worry about that. That variance amount will never accumulate. So that's it for inventory. Next we have our sales module, which I've already got open here. Sales module, there's 3 or 4 options. And you can see a pattern here. All of our year-end processing is always going to be under the Period End menu option up here in the menus. It's always going to be under Period End. So in our sales module, we've got the credit card totals. We reset those to 0. We've got the deposit journal for work orders, deposits that have been made to work orders. You reset the deposit journal. Any deposits that are settled, unpaid in full, or refunded, those deposits will be purged from the deposit journal with this option here. Settled checks. If you've got any checks that have bounced from your customers or returned unpaid and they've been settled, so the customers have come in and cleared that up, you can purge the settled checks that are in your system for the year as well. If you have the point of sale system and you've processed holds, then this will purge all holds that have not yet been converted to an invoice. And then we can also purge out the closed layaways that's also set up in the point of system as well. So basically all we are doing with these processes is we are just resetting all of the amounts for the new year. Now the purge history, that one we're going to leave until later. I'll talk about that a little bit later in the webinar. All modules do have a purge history option, and we will talk about that a little bit later. You don't want to purge history every time you do the year-end processing because the history is something you're going to want to keep at least for a couple of years back. Okay, so that's all there is for sales. We just reset those numbers and you're good to go for the new year. The next one is accounts payable. Accounts payable has one other issue that you may be dealing with for year end, but you may not. It depends on if you have any 1099 vendors. Any vendors that you are required to issue a 1099 form, then you're going to have to go through one extra step in the accounts payable module. And again, that's all done up here under the period end system, the period end menu. So for accounts payable, what you're going to do for your 1099 vendors is after you have processed your 1099 forms, after you have processed those forms, printed them out, and distributed those to the vendors, then you're going to reset the year-to-date vendor totals so that that will reset those 1099 numbers for the new year. What that does is that resets everything from the previous year, periods 1 through 12, but it does not reset it for period 14 going forward on the fiscal calendar. That way, any transactions on the 1099 vendors for the current year will not be purged, only the previous year gets purged. This also rolls the calendar under the module preferences in accounts payable to the new year. When you reset the year-to-date vendors, that number right there for the current year will automatically roll to the next year for you, for your 1099 processing in the accounts payable module. After you've done that for the vendors, then you may want to remove temporary vendors at the end of the year as well. So you would click on this option here to get rid of all of your temporary vendors that you're no longer using. So for accounts payable, again, we're just resetting numbers just like the other modules. All right, now we'll go into payroll here. We'll talk about payroll a little bit. Now in Denali Payroll, the payroll is set up with 5 pay periods. They're quarterly pay periods. You've got the first period, which is January through March, second period April through June, third is July through September, the fourth period is October through December. But then you have a 5th period set up in Denali Payroll. That 5th period is specifically designed so that you can continue to run your payroll processes for the next year if you have not yet closed out the previous year. And what that is that's, again, January through March for the following year. That is what the 5th payroll period is. So you can continue to run payroll into the next year up through March 31st. But if you come in here and try to run a payroll batch after March 31st, Denali Payroll is going to say, we are outside of the 5th period. We can't do this anymore. So now you would be forced to close the year in payroll. To close the year in payroll, we just reset year-to-date totals. That's all we have to do here. And what that does is that clears out everything in periods 1 through 4 that have accumulated on all of the employee records. And then it takes all of your transaction data on period 5 and it just moves that back to period 1 so that you are now in the next year. However, with Denali Payroll, this does not clear the history. So all of the transactions will still be in the history if you need to retrieve the information from history. And the history is there until you purge history in payroll as well. Now right now, Denali 5 does not have the option to purge history yet because it's still a new module. We just came out with it less than a year ago. So probably by the end of 2015, we will have another option under the period end in an updated version of Denali Payroll that allows you to purge history if needed. But for now, there's no need to do that because there's not enough history in there to purge at this point. So we only have the reset year-to-date totals, which resets all of the open items to 0 except for in period 5, and it just takes those numbers and moves those back to period 1. Like accounts payable, this will also roll the calendar in payroll forward for the next year. When we bring up the menu here, you'll see we're on 2014. If we reset year-to-date totals, this number automatically rolls to 2015 for you. So you don't have to come into the preferences here and change that. Okay, so that takes care of all of our modules year-end processing except for our #1 main accounting module, which is General Ledger. Now before I go into General Ledger, I just want to bring up the fiscal calendar here and show you how that works. Right now, our fiscal calendar set for the current year begins on January 1st, 2014. If your fiscal calendar starts on June 1st or March 1st or some other day, that's fine. But you don't want to process this year-end until your fiscal calendar has come to an end for the current year. So in other words, you have to at least already be in year 2 before you close the year in the General Ledger module. One more thing I want to talk about too before I get too far in General Ledger, just to back up on payroll a little bit, since I've got the fiscal calendar up here. If your fiscal calendar starts in March or June or some other day other than January 1st, the payroll and accounts payable calendars will still always start on January 1st. And the reason why is because those are for your 1099s and or your W-2 forms, and those always have to be on a calendar year. So you may be processing the year end on payroll and accounts payable at a different time of the year than you would be processing the year end for General Ledger, just depending on what your accounting fiscal calendar is set to here. For our demonstration purposes, they're all set to January 1st. That makes it easier for us. So when you close the year in General Ledger, that will roll this calendar forward 1 year. Now what's nice about Denali is you have a 5-year fiscal calendar, so you don't really have to close your year clear up until you get to the end of period 64, or in our example here, December 31st, 2018. So if we have not done a year-end close in the General Ledger by January 1st, 2019, then the whole system shuts down at that point. You will not be able to process any transactions until we do a year-end close. So what will happen is, when we run the year-end close in General Ledger, it closes out the income and expense accounts like it's supposed to, but it also rolls this calendar forward 1 year. So the current year now starts on January 1st, 2015, and year 5 will end on December 31st, 2019, after the year-end close is done in General Ledger. So with that, let's jump into General Ledger and let's get that going. So this is the main year-end close process. It's always done here in the General Ledger module. One thing to keep in mind is if you are closing out the totals in the other modules, you're resetting those numbers that we just went through. If you're going to do that, it is recommended to do that prior to doing a year-end close in General Ledger. However, it's not required. So if you wanted to leave those totals accumulating year after year in the other modules, there's nothing wrong with that, except for you have to just realize when you're bringing up those numbers, it's the accumulated total since the last time you reset them, not year to date. You can still come into General Ledger and run the year-end close without resetting those other modules, those totals in the other modules. That includes payroll as well. And the reason why it includes payroll is because, like I said, payroll is on a calendar year. General Ledger may be on a different fiscal year. So the year-end process for each module is separate and independent from the other modules. But it is recommended to close out the numbers in the other modules prior to running your year-end close in General Ledger, just so you can keep all of your numbers straight and current. So in the General Ledger module, you're going to go to the year-end menu up here at the top, and you're going to just select Close Year. Now what happens when you close the year in the General Ledger is, the first thing you're going to see is this great big warning, always do a backup before you proceed with your year-end. Now we also did a copy company, so we've got the backup and the copy company in place and we're good to go. Now with the General Ledger, your year-end close is going to create a great big journal entry, and that is closing out the income and expense accounts for the year. So what it does is it takes the remaining income, the bottom line from all of your income and expense accounts in the General Ledger, and the remaining income it will post to the retained earnings account, because the transaction has to be balanced. So whatever the net income amount is, that will post to your retained earnings account. So Denali needs to know, what is that account? So you put the retained earnings account here before you process your year-end close. And what you can do if you don't know the number, if you don't have your account numbers memorized, is you can double-click here, just like in anything else, and this will bring up a list of all of your possible retained earning accounts. And look at this, our demo company does, oh yep, there it is. I thought it didn't have one, but there it is right there. A retained earning account is always going to be an equity account. So these are a list of all of our equity accounts in the General Ledger, and there's one we have labeled retained earnings. So when we run our year-end close, we will go ahead and just process it through to the retained earnings. So now it's saying process the year-end close using 3,200 as the retained earnings account. So any net income we have will post to the 3,200 as retained earnings from the previous year. So when we process that, then we get a posting report, just like we do when we enter any other transaction in Denali. So we're going to take a look at this posting report. This will show you exactly what the year-end close does. So as you can see, our very first number is retained earnings posting of $19,180.64 to the retained earnings account. However, that is actually a debit posting. So in this example, we had a $19,180.64 loss for the year. We actually had a net loss, not a net income. So this is what posted to the account, a $19,000 debit, and then we had all of these other debits that posted out of our income accounts to zero them out. So these are all of our income accounts. They normally carry a credit balance, but we are zeroing them out, so they are going to have a debit posting. We have a couple of income accounts that we have set up for returns. Those carry a debit balance, so they have a credit posting to zero them out. And then here's all of our expense accounts. Most of those should show a credit posting on this report because expense accounts normally carry a debit balance. So to zero them out, you should see a credit posting on this report. And then at the bottom, we see our total debits and credits equal. So therefore, the transaction balanced, and our year is now closed. So now, when we go into our controller module, we bring up our fiscal calendar. It now starts on January 1st, 2015. And it now ends on December 31st of 2019. So the fiscal calendar has now been rolled forward. We now have our year-end posting, and we are ready to go forward for the next year. Okay, so there's a slightly different process if you have our fund accounting suite. If you're a nonprofit and you're using the Denali fund accounting suite, the year-end close is a little bit more complicated in the general ledger. So we'll bring that up real quick and talk about that. Now in the fund accounting, what's going to happen is you're going to see the same fiscal calendar that we normally see. This one hasn't been closed out since 2010. All right, we're behind on our year-end close. Now in the fund accounting, all of our other modules that we're using are going to be the exact same process as they are in the regular for-profit accounting, except for general ledger. It's the only thing that's going to be different. When we are in fund accounting, we do not close out the entire organization until we have gone through the process of closing out each and every fund, because every fund has to be closed out separately. So in the general ledger, we set up our funds because we're nonprofit. So when you close out your funds under your year-end menu here, you have to close out the funds first, and then you close out the organization. So we grab one of our funds here, we close it out. Now when you close out the fund, what this does is this does the exact same thing as it does in for-profit for all of the revenue and expense accounts, but it only does it for this fund only. So we'll close out that fund, then when we're done, we'll close out the next fund, close it out. When we're done, we got to close out the next fund. We got to do this process for all funds that we have set up in nonprofit. After the funds are all done and closed out, then we close out the organization. Now, closing the organization, the only thing this will do is roll your fiscal calendar forward 1 year. And the reason it does that is because all of our expense and revenue accounts were zeroed out when we closed the fund. So when all the funds were closed out, the year-end posting was done at the fund closing. So the only thing left is to roll the fiscal calendar. So closing your organization, that's the only thing that's going to do. So For nonprofit fund accounting, it's a little bit more of a process. We have to close out the funds first, then we close out the year. Now, if you only have a few funds, that's not too hard, but there are a lot of nonprofits that have many funds, so that can be quite a process. Sometimes you may have the fund set up on a different fiscal calendar than your main organization fiscal calendar. So you would close the fund out when the fiscal calendar came to the end of that fund only, and then you could come back later and close out the other funds as needed. But you can't close the year out until all funds for that year have been closed. All right, so the only thing left after we've closed everything out, we're ready to go forward, you now have the option to purge history, and every module has this purge history option. This option right here allows you to clean up your old database files, your old database transactions if you no longer need those. Now remember, we have our copy company, so that information is still available in the copy company, so it doesn't hurt to go into the main company and purge the history to keep your database nice and clean. So you can purge the history, but if you do, we always recommend to only purge through the end of 2 years back. So for example, if we are in the year 2014, we just closed out 2014, we recommend only purge up through 2012. So that way you still have all of your history for 2013 and 2014 in your main company. So anytime you run a history report, you will still be able to pull up that information. But anything prior to 2 years ago and older would be purged if we were to do this purge history process. And you can run the same process in every module to purge the history for the modules, because each module's history is independent from the other modules. But always, always remember, you got the big warning here, run a backup before processing. So I would even recommend running a backup before purging history after we did the year-end close. Even though we ran a backup before the year-end close, run it again before purging history, just to make sure you can undo that if needed. Because remember, our backup is our undo button for any of these major steps. We would just restore the backup to undo what we need. All right. So now that basically brings us to the end of our webinar. We have pretty much gone through everything. So we'll now get to your questions here. Okay. Question from George. Shouldn't the control reports be run first in accounts payable, accounts receivable, and inventory before starting the year-end process? Yes, George, that is a very good point. If you are doing a year-end close, it is recommended to run those control reports first. What I recommend to do, though, is I would recommend running those control reports every month. Make that part of your month-end process rather than your year-end. And that's why I didn't cover it on this webinar today, because those control reports should be done every month. And that's basically the step you take to reconcile the accounts receivable, the accounts payable, the inventory with the general ledger. So you're going to want to run those control reports at least once a month. And that's your reconciliation to general ledger for the other modules. And if you're doing that every month, then yes, you'll do that before you do the year-end close as well for December. And that way you keep everything straight on that. And then another question from George, how about balancing the GL trial balance to tax return or accountant's info? Yes, all that has to be done before we even start the year-end close process. So when you're talking about year-end taxes, year-end financials, then yes, that is definitely the information you're going to need to have ran before you do the year-end close. Now, if you ever need to retrieve like a year-end trial balance or anything like that after you've done a year-end close, then that's what our copy company's for. We can go into there and we can still pull up those trial balance numbers, those income statements, whatever we need. And another question here, is there a recalc the year-to-date totals in the accounts payable master like there was in the pro? Let me show you how that works real quick, since we're pulling that up. Yes, in Denali, we have the same option in accounts payable and accounts receivable and inventory under the table maintenance to recalculate the vendor balances in accounts payable, customer balances in AR, and the inventory item quantity counts in inventory. So those options are still available in Denali, yes. Okay, another good question, George. Can you print 1099s off from the prior year? Yes, you can. What you do in that is when you run reports, I guess I need to be to the right module here in Accounts Payable. When you run reports, 1099s, then you do have the option to use the previous year's information there. So what happens in Accounts Payable when you do the year-end close is it takes the current year-to-date totals for the 1099s and it moves them over to the previous year's column in the vendor maintenance screen. You can actually edit those amounts too if needed. Okay, a question from Sue. It says, I have already rolled the payroll year. I get a warning that the leave exceeds something. We don't accumulate leave. Not sure what this warning is. Okay, Sue, that looks like it might be an issue for support. Normally when you run the year-end for payroll, it resets the year-to-date accumulators for the leave as well, for the leave codes. However, if those amounts don't have a limit, basically, if you have a limit up to a maximum amount, then you can still show those accumulations going forward to the next year up to the maximum amount. That's part of the payroll setup. So for that question, you would probably want to contact tech support and they could look into that and see why you're getting that error. Question from Kathy. Shouldn't each module be balanced first before closing? Yes, that is correct, Kathy. Again, that is done on a monthly basis. That's what I would recommend, doing it on a monthly basis. Run those control reports, balance the module with the general ledger every month. And then you would do that for December before doing your year-end close for the year. Another question from Susan. In the fiscal calendar, do you have to set the period block period to 12? No, the period block period allows you to block periods without doing the year-end close. So if you block a period to 12, what's going to happen is anything from period 12 back cannot have any transactions post to those periods. Now, if you close the year, remember, all the periods are going to change because periods 1 through 12 for 2014, 14 through 26 or 2015, and so forth. Now, periods 1 through 12 are going to be 2015. So if you are blocking period 12, after you do a year-end close, it's going to block your current year. So you probably want to reset the block period to 0 after doing a year-end close, if you had set that block period prior to the year-end close. Another question from Susan. In the fiscal calendar, do you have to set the period block period to 12? Oh, that's the same one. It was just posted twice. Okay, there we go. Steve, sales module. Yeah, we covered that. You basically, all you're doing there is resetting credit card totals and year-to-date accumulators. You've got the deposit journal. You've got the holds in the point of sale. Deposit journal is for order entry, work orders. You also have layaways. You can close out the layaways that have been closed. Also, the flagged checks. Any cleared flagged checks, you can purge those from your list as well. Just about done here from Wendy. If our fiscal year end is different, say like June, can we call for help if we need help completing the year end? Absolutely, Wendy. If you ever need any help, just give tech support a call. We can definitely take care of that for you. And another question, how do we run the control reports? Basically, that's under the report menu. The only modules you're going to see that in is accounts receivable, accounts payable, and inventory. Those three modules you're going to run your control reports, and that will, the balances you see on those reports should match the account balances in the general ledger for those codes, the AR codes, the AP codes, and the inventory codes. Just check the reports menu on your screen. That's how you would run those. Oh, good answer, Steve. You said you'd come back to the sales module. Basically, I was going to come back to that, and I was going to cover purging history. So I can do that here, and it's the same thing. When you come here to period end for purging history, that's what we were talking about, just like we saw in general ledger. Again, we recommend purging history for 2 years back and older. Keep at least 2 years of history in there. So it's the same process there. Okay, another question. Is there a recalc here to date paid for vendors like there was in Pro? I am not too familiar with that option there, George. For a period end, we got the reset year-to-date tools, and we've got the recalculate their master file. Those are the only recalc options we have in Denali for accounts payable. I'll do a little more research on that for you, George, because I don't recall exactly how Pro worked on that, and I'll get a better answer for you up on the website. All right, so we are going to be done here today. Any other questions? Any other questions that pop up here, we will go ahead and get the answers up on the website for that, and we'll get this webinar posted for you so that you can come back and view it. And the questions will also have posted for you on the website. So make sure you check back, keep an eye out. We have upcoming webinars. The next one is on February 4th. It's going to talk about the new features in Denali 5 that was recently released. And the next one after that, on February 18th, is going to talk about the Advanced General Ledger Reports, which is also a new feature that we've set up in Denali. So we'll be sure to check back for those webinars, and we'll go ahead and get those done for you as well. All right. Well, thank you so much for attending today. Look forward to the next webinar in a couple weeks. Be sure to check back, and we'll go ahead and get going on those. Check the website for follow-up communications and access to this recorded presentation as well. So thank you so much for attending, and have a great day.